Hello friends, in the series on the income tax cases, today we will discuss a very important case which has been decided by the Chandigarh ITAT B bench regarding the assessments which were done for the assessment years 17-18 and especially covering the point of cash deposit during the demonetization period which was already taken by the assessee in its sale into the duly audited profit and loss account on which the VAT was paid, and it was also reflected in the VAT returns, and the revenue has made the additions under section 68 in those cases. So whether the addition under section 68 can be done just on the basis that the cash deposit during the demonetization period is not in alignment with the pattern of the cash sales and cash deposit before demonetization period and after demonetization period. This was the core issue in the present case. The name of the case is Fashion Zone versus Joint Commissioner of Income Tax, and this case has been reported in 111 ITR Tribunal at page number 138, and the date of the judgment is 20th March 2024. In the present case, the assessee has deposited the cash during the demonetization period by saying that this cash was out of the cash sales which has been made by the assessee during the demonetization period. During the assessment proceedings, as all we know that the revenue has given some formats in which the assessee has to give the details of the cash deposit, like cash deposited during the demonetization period, cash deposit exactly in the same period in the preceding period and in the further periods. When this cash deposit was analyzed by the revenue, and in those cases where the revenue found that the cash deposit is not in alignment with those patterns, the revenue adopted a very high-headed approach in making the additions without going into the integrities of the case or without even pinpointing any defect in the books of the assessee. This was the harsh reality of the assessments which are related to the demonetization period. In the present case, when the assessee was asked to present the cash book, after analyzing the cash book, the learned assessing officer found some very abnormal features in the cash book. The learned assessing officer found that prior to October 2016, very nominal instances of cash sales were there, and after October 2016, cash sales increased abruptly, and then again after December 2016, cash sales again gone down. The learned assessing officer also observed that in October 2016, the cash was 13.52 lakh, which increased up to 48.1 lakh up to 6th November 2016. So these were the unusual patterns. The main crux of the unusual pattern was that before demonetization period there was no cash sale, and after the demonetization period there was no cash sale. So whatever the cash sale and deposit was there, that was during the demonetization period. But the assessee has submitted all the VAT returns, whatever the sales have been made during the demonetization period, that was duly incorporated into the VAT returns. VAT was paid and it was duly incorporated into the audited profit and loss account and balance sheet of the assessee. The learned assessing officer, without making any defect in these books, in any documents, just go ahead with the addition under section 68. CIT appeal upheld the assessment order. When the tribunal heard the matter, the tribunal was of the considered view that comparable figures for past years could provide a starting point for further examination and verification, but that does not mean that the revenue can make the addition under section 68 just by rejecting the books of accounts and by without pinpointing any of the defect into the document submitted by the assessee, like in this case VAT returns, audited profit and loss account, cash books, and the sale which is not as per the pattern in the previous years or the future years cannot be the sole basis for making the addition. Friends, this case is very important because now the cases have coming from the side of the tribunal. In those cases, the relief has been given by the tribunals for the cash deposit during the demonetization period if the assessee has prepared all its audited profit and loss account and the sale has been incorporated into the VAT returns, GST returns, etc. At the end of this video, once again I am repeating the name of the case. The name of the case is Fashion Zone versus Joint Commissioner of Income Tax, and this case has been reported in 111 ITR Tribunal at page number 138, and the date of the judgment is 20th March 2024. Thank you, friends.